Welcome back to Kiwoon Learning. I'm Caleb, and today we'll be doing a stock analysis on Alibaba, the stock that seemingly just won't stop falling. Year to date, the stock is down nearly 50%, and from all-time highs, Alibaba is down over 60%. And I know a lot of people who have owned the stock and who are still owning the stock have been feeling the pain for quite some time now. But in this video, I'll be breaking down Alibaba's business model and going over the key factors like growth, fundamentals, and profitability, while also going over price target and valuation and whether this stock is a buy, hold, or sell at this time. But before I get into this video, if you guys are enjoying the content, make sure to hit that like and subscribe button down below. Now let's get right into it. When we last looked at Alibaba, we talked about their earnings and how Omicron and the Chinese regulations would affect their business. But just for a short recap, what does Alibaba actually do? In comparison to the US market, just as Amazon is known to most American consumers as an e-commerce titan, China's e-commerce market is largely dominated by Alibaba. Alibaba's core business resembles that of eBay. Alibaba acts as a middleman between buyers and sellers online that facilitates the sale of goods between the two parties. In addition to the two sites, Alibaba also created Alipay. Alipay essentially protects buyers in the event sellers are unable to or refuse to deliver goods. Now let's get into some numbers. To begin with, Alibaba has a return on equity of 13.35%. And as value investors, we look for return on equity anywhere between 15 and 20%. And in the past year, Alibaba was soaring above these numbers. But as I covered in the last Alibaba video, their business model just wasn't sustainable at that given time. With growing Omicron concerns, I believe Alibaba will do well in 2022, but this doesn't directly translate to valuation due to Chinese regulations and rumors of other Chinese stocks being delisted from the New York Stock Exchange. Alibaba also has the lowest price-to-book ratio that it's had since its IPO back in 2014. Coming in at just over 2, it really just shows that it can be another checkmark for value investors because we really want the price to book to be anywhere between 1 and 3. This is because it shows a fair and accurate picture of what the company is worth while also going back to their actual accounting numbers. The last main fundamental I want to go over is Alibaba's price to sales ratio, or P to S ratio. This is because when they come in at just over 2, it is actually slightly out of that 1 to 2 range that, as value investors we are looking for. But again, this does not necessarily mean they are a bad company. It mainly just means that investors are willing to trade at a premium for Alibaba. The reason why I love price to sales is due to the fact that sales are a lot harder to manipulate and are relatively reliable. When we look at a 5-year projection for Alibaba, we can see that their fair value comes in at just around $176. But even on the lower end, again, given these projections in price to sales, that their implied value should be around $165. And the reason why I'm mainly using price to sales projections for Alibaba is because of the potential market manipulations and regulations that are being put in place by the US and Chinese government. Because truly, if you believe that Alibaba's numbers and fundamentals are correct, they are one of the best buys on the market right now. But as value investors, we need to look at the whole picture. Going on to this article by CNN Business, we can see that authorities at this time are accusing Didi of breaking privacy laws and posing cybersecurity risks, and this essentially led to Beijing proposing that any company with data over 1 million users has to seek approval before listing overseas. But in this paragraph right under it, we see that it's not only the Chinese government. A lot of people try to blame the Chinese government as kind of like a scapegoat, but it is the US government as well. It says that the pressure isn't just coming from China. Earlier this month, the U.S. Securities and Exchange Commission, or the SEC, finalized rules that it would allow to delist foreign firms that refuse to open their books to U.S. regulators. And for years, China has rejected U.S. audits, citing that there has been a lot of national security concerns because of this. And in reality, this could lead to Alibaba being delisted. And although fundamentally Alibaba has an upside of over 40%, I believe that there are too many concerns in the overall markets to even say that they are even undervalued. If you're holding Alibaba for long term, I applaud you. It's no such easy thing to do, and you're sticking to what you believe was a value play. And it is. I just think that Alibaba is too volatile to trade until that they get back above a few of their major moving averages. I believe that if you're already holding this stock, keep holding it as a diversification play into other markets, but if you're not already in it, I would stay out of it for now. The last thing I want to cover is some of Alibaba's technical charts. As a long-term play, we can see that this stochastic is starting to move up through the sweet spot, and if it can break through this 10-day and 20-day moving average, I believe that it can easily hit 145. Last time this happened was back in late October, and they made a huge move from 137 all the way to the low 180s. And I don't believe that Alibaba's next move will be this dramatic, but I do believe this 145 range is very viable to get up into. And as a shorter term play, it seems that Alibaba is starting to consolidate. The main resistance is going to be their psychological levels on the downside of 115 and 110, but as you can see, the shorter term stochastic is starting to turn down, which can possibly lead to a nice short of the stock because it's already within that sweet spot. But yeah, guys, that's basically all I have. I hope you guys have a great rest of your day, and make sure to drop any stocks analysis suggestions down below. And I really do like Alibaba as a company with their numbers and their trading, but just with the overall regulations and concerns that they have overall, I just wouldn't touch it for right now. But I hope you guys have a great rest of your day, and peace.